Mark Matthews joins us now to take the conversation forward. He's head of investment research with Julius Baer Mark. Good morning. Thank you for joining us. Mark, yesterday was an epic day for Chinese stock markets. I mean, the Chinese stock markets registered one of the biggest gains in a long time. And after months and weeks of underperformance, China is outperforming. What does that mean for markets like India?
I've been wondering the same question all morning. On the one hand, I think that if things get better in China, which they are, it will reignite interest in the emerging markets. But on the other hand, if people want to move money into China from other emerging markets, then they could sell India. So I think very simply, net, both kind of cancel each other out, if you know what I mean. So people who haven't allocated to emerging markets before could put money in because they're feeling better about the situation with China, and a little of that will trickle through into India. But on the opposite side, people who have already invested in the emerging markets may want to shift from India to China. I guess what I'm talking about are the emerging market specialists. So I think net, it's pretty much a neutral announcement for India.
The fact that the Chinese and the Americans are talking and no one really wants a trade war, and Americans have got better off when it comes to containing and increasing tariffs. Do you think world should now not be scared of a tariff war, and fears of a demand slump in metal and other commodities can be ruled out?
Well, I don't think it means the Americans have changed their generally more protectionist stance. If anything, they seem to be just shifting their focus over to Germany now. They're talking about slapping tariffs on German car imports. So their relationship with China is improving, but it doesn't mean the relationship with other parts of the world is improving. But I think an important part of the conversation outside of the trade talks is that there are signs now China's economy is bottoming out. And it's not that it's picking up very fast, but at least it's bottoming out. And so you rightly pointed out that commodity demand as a result of that could be higher now.
Mark, morning. What explains the India underperformance vis-a-vis the rest of the world? And, this is emerging markets as well as the developed markets put together year to date. Would you say it's the obvious, the big overhang of the general elections in a few months down the line? Or is it also coupled with the fact that India has been an expensive market, and irrespective of the fall that we've seen from the top, at least the large caps, they continue to be expensive?
I can't quite put my finger on it because there are other emerging markets that have important elections coming up that have actually done quite well. The one that pops in my mind first and foremost is Indonesia. Indonesia has a critical election, which is just as close to call as India's, but Indonesia's been a fantastic market so far this year. So maybe it's politics, because Indian politics get a lot more publicity globally than Indonesian ones do. But I think it's also that last year the analysts were too aggressive with their earnings forecasts, and so therefore there's a lack of confidence that the earnings that are forecast for this fiscal year will actually live up to expectations. And in my own mind, I don't hear people talking about it much anymore, but in my own mind, there's still the lingering issue of the non-bank financial companies, and that seems to have been put on the back burner. And yet I still, in my mind, it strikes me that it couldn't have just been one, if you know what I mean. So a lot of money was lent out by these companies when the banks were dealing with their NPA problem over the last 3 or 4 years. And the quality of those loans, I think, is still a big question mark.
Mark, so I understand that the stance that you have at Julius Baer is an underweight on the Indian markets. And what exactly are you reading by way of our equation with crude oil prices?
The crude oil price, we actually think, should head a little further north, back to about $65 a barrel, because the OPEC countries seem to be quite intent on cutting prices. I don't think that it can go much higher than 65 either, because there's an election in the United States next year, and Donald Trump has made it very obvious that he doesn't like high oil prices. Republican voters tend to drive large gas-guzzling SUVs, and so he will want to try to keep the price low for them. Therefore, yeah, I think we're looking for $65 on WTI in the next 6 months.
Okay, I like how you put that with respect to what's going on with the situation with crude oil prices and the Republicans. But give us a sense, you touched upon, Mark, what's going on within the banking space as a whole. How are you looking at the situation in India? We have very strict norms now setting in. Do you think that we are likely to see an overall material difference, that we're going to see a pickup in the credit offtake?
I hope so, but I don't think so, because when I speak with people in India, still the lingering legacy of the GST and demonetization appears to have constrained small and medium-sized enterprises from increasing their investment and consumption. So I don't see a big pickup in the capex cycle on the horizon. Therefore, difficult to see a lot of credit growth either. But that doesn't mean there's no place for banks and people's portfolios. And in fact, some of our favorite investments are the good quality banks in India. I think that, in fact, they benefit from the weakness of the others. And eventually there will be a capex cycle. Probably we need to wait till after the election's over, too. So good quality banks, I think, are absolutely fine in India, good things to invest in.
This year be a year of positive returns for emerging markets, and within that, Indian markets, do you think, can give a double-digit return from here to year end, because we've underperformed massively?
I think a lot of the bad news has been put in the price in India, so I wouldn't be as negative on it anymore. But the big issue for me is to wait for the outcome of the election, because there does seem to have been a narrowing of the gap in the polls between BJP and the opposition, and so I think I'd prefer to wait to see the outcome of that before we become more positive on it.
So, Mark, when the election uncertainty gets done, most people believe, depending on what the outcome is, that then it's going to be a one-way move, hopefully, for Indian equities. But I guess right now is the time when you got to accumulate, you got to nibble into those spaces where you believe, going by what you're convinced about the election outcome, if that were to come to, those stocks or sectors are likely to be beneficial. What outside of the corporate banks, the private banks that you mentioned, high-quality names, do you think would be of interest if, say, the same government is to come to power? Most believe that perhaps construction and infrastructure is going to get a big leg up in accordance with the current government's policies. And if they were to come back, it's these stocks and these companies which are likely to benefit. Do you believe so? Is that something that you would put your money on?
I'd have a preference for more structural stories than cyclical ones. And I mentioned that we like good quality banks, but we also like the consumer sector. And I think that I would just reiterate that. I think that it's still a structural growth story in India. I would say probably especially in the rural areas. So that would be another one.
Okay. While the expectation was that we would receive passive fund flows from overseas, off late we have seen it a bit of a pickup coming in. In fact, interesting data from our research team seems to suggest that we've seen a positive market breadth as well for the last 5 days in a row, which is the longest streak that we've seen since August 2018. How are you looking into the overall liquidity situation for India?
I think it should be generally positive. On the one hand, you have the RBI, which is more dovish than it has been under 2 previous governorships. And on the other hand, the global central banks have taken a step back from their tightening as well. First and foremost, the Federal Reserve, with its 180-degree change on monetary policy it made at the beginning of January. And I don't think they can flip-flop back and forth with their policy without losing credibility. So having just told us that they were going to pause in their interest rate hikes, and they gave us a target for ending quantitative tightening, I don't think they can go back now to saying that they'll be raising rates anytime soon. The earliest they can do it, I think, is in September. So between now and then, the liquidity tap is on globally, and that benefits India as well.
Mark, we've seen a visible uptick in crude. Every time crude is going $60 plus, the watchdog, which is US President Donald Trump, he tweets out something indicating that OPEC needs to watch the uptick in crude prices. So what is your sense? I mean, do you think crude could be a spoil sport, or crude prices are well under contained, and if crude prices don't go higher, that's excellent news for India, China and major economies which are crude importers?
So I think that it will probably go higher because the OPEC countries seem quite committed to production cuts. As you know, I'm sure most of them can only balance their budgets with oil prices well below even the current price. So they really couldn't take it when the price was back down in the mid-50s. But to get a lot above, let's say, $70 a barrel, I also struggle, because then I think that Trump would, start also talking a lot more about it, and I think also possibly extending the what do I want to call this? So there were 8 countries that were granted exemptions from the Iranian oil embargo, India being one of them, and he could simply extend that grant. There's lots of ways that I think he could manage the oil price lower, and therefore I don't see it going a lot higher.
So Mark, closing comments. If you had the option to, let's say, invest $1 million for a client in one asset class for next 3 years, where you have the liberty not to bother about Indian elections or think about what Fed will do in 2019, or consider trade war as an impediment, which is that one asset class you would say, look, I will go all in poker terminology, and I'll park my client's money?
Well, I'm sorry to give you a very precise answer. It probably is too precise for you, but I think that the real estate investment trusts, which are basically landlords that manage malls and offices, hotels, hospitals, warehouses, that kind of thing, they have a really, really good track record of producing excellent dividends. And if you keep compounding those dividends, owning real estate investment trusts, I think, is a wonderful investment on a 3-year time horizon included. I'm in Singapore, so I just gravitate to the Singaporean ones. It's the second largest real estate investment trust market outside of Japan and Asia. So there are a lot of ones listed here that have assets outside of Singapore in places like China, India, Indonesia, Australia, England. But they pay on average about a 6 or 7% yield per annum in Singapore dollars. And if you compound that and you get some growth in their asset base as well, to me that strikes me as a very good risk return.
Mark, great to have you on the show. Thanks so much for taking the time out.